good, everybody? Welcome to the Closing Beat. I'm Dustin Tibbetts, financial advisor with Jazz Wealth Managers. This is our sort of stock market update show. It doesn't always go according to plan, but so far it's been pretty good. In the new space here, not too many glitches. We're enjoying it. If you're watching us for the first time, we're just going to go over the stock market real briefly. We'll go over everything that's pretty much happened on the day, the good, the bad, and the ugly. Try to leave the drama out of it. All the drama stuff, by the way, I try to put at the bottom. So if there's anything that has to do with, governments or who left who, and it relates to public companies, if I put it anywhere, it's going to be below. I like to get down to the meat of it, and so that's what we will do today. Well, if you look off to your right-hand side there, you see the markets today a little higher, however, very misleading. So I'll go through it here for a second. You got the Dow higher by 1/3%. That's about 82 points after being down about 80, up 300. It was sort of a wild day, but that's 1/3%. It closes higher. All of that because, well, almost all of it because of one stock. We'll cover that later. S&P 500 basically flat on the day, and then the Nasdaq 100 closing higher by 30 points. Actually, a decent day for some of the bigger tech stock names. We'll go through those. But basically a misleading day. If you had to look through the major market indices, you would say that the S&P 500 got it right today. So the fact that the S&P 500, if you look on the screen there, very much flat, not really anything going on. Got the 5-minute chart down below so you could see the back and forth throughout the day, ultimately finishing about even. That's very normal. Usually a slight uptick on the day before a Fed announcement or the first day that the Fed meeting starts, which was today. But all the action really comes tomorrow. So if you look at the S&P 500 today, you go, hey man, nothing happened. Why didn't anything happen? Well, it's all because the Fed tomorrow, they are going to make their decision on raising rates. And my opinion, of course, as I've said already, that they will raise rates tomorrow a quarter of a point, and then they will use many big words to say that they're basically going to sit back and wait and see what happens and monitor the data, monitor what happens in the overall economy, try to make themselves look good, and I think they will. So we'll see what happens tomorrow. You got about a 50-50 shot. If you look at the social media sort of analytics that are out there that see, do people think the market's going to sell off or rally after the Fed announcement? It's almost 50-50 what's going on. So it really should be an interesting day. Again, that all starts tomorrow about 2 o'clock in the afternoon. So the morning time will be an absolute snoozer if you want to just sleep in and check in later. So that's the overall markets. Friday, we got the potential for a partial shutdown government-wise. That will create some volatility in the markets. However, today they were talking about, hey, let's kick the can down the road till February. Let's negotiate a little bit, see what's going to happen. That sort of frustrates me because why all of a sudden do we have to say, let's just meet back up in February or see if we can come to an agreement by then? Why haven't we been coming up? It's not like an immediate shocker that the government was not going to have funding after Friday. So just annoying. Again, I try to save the drama for down below. We'll see what happens. I'll keep you posted, of course, because that will affect the markets in the short term. But right now, it looks like they're going to pass a bill that says, we'll wait till February, we'll fight it out until then, which means they're not going to do anything until the very last day in February. They'll fight it out then, and it's just so annoying. Just get it over with already. Anyways, so that's what's going on with the markets. Let's take a look at the charts here. I want to just dive right into this. Yep, it all worked. So here's the Dow today. It was up a little higher. Look, it's lower after hours, so you should know the market's already starting to kind of, it has given back a lot of its, all of its gains. But the fact that it closed at 4 o'clock today, higher by 82 points, about 70 to 75 points, I can't do the exact math, 70 to 75 points all came from one stock, and that was Boeing. So Boeing was higher by about 4% on the day today. They're going to increase their stock buyback program by $2 billion to $20 billion in total, and they raised their dividend by 20%. So good news there if you like holding shares of Boeing. But because that was up about 4%, that was basically the reason the Dow finished positive today. So like I said, the S&P got it right. The S&P had to fight with bank stocks that just really didn't do a whole lot, rightfully so. I wouldn't expect much out of the banks today. Semiconductors, which actually got a bid today. If you want to take a look, your tech stocks did get a little bit of a bid, up just about 1%. But you had weak oil. So oil down almost 8% on the day, breaking to new lows. And that's going to be your weakest sector or your weakest area of the market by far. The shale production here in the U.S. has reached 8 million barrels a day. That's a record. That's an all-time record. And Russia also reached an all-time record for oil production, I believe at 11.5 million barrels per day, which is a record for them, assuming that that number is correct. So all of that in mind, with the possibility of, hey, maybe the economy's slowing a little bit, so there'd be less demand for an already oversupplied commodity, and that's a recipe for an 8% down day. Very aggressive. So in the S&P 500, you have energy, which makes up like 18% of the entire S&P 500, just getting pummeled, an absolute pummeling today in the S&P 500. So, or I'm sorry, in the price of oil, oil stocks, oil transportation stocks, energy stocks. Here's the energy sector making new 52-week lows. Oil production and explorers down 52 new week lows. Service stocks 52 new week lows. And then the ETFs that track like the bulks, all of them, those were also lower, new 52-week lows. So that's kind of your sector update as far as that goes. Oil, big downside today. You got home builders. There was a new housing starts came out today. The number was better than expected. However, it was down 13% compared to last year. So new housing starts have slowed down a little bit. There are less people wanting to build and buy brand new homes. And so you saw a little bit of a downtick initially. However, these home builders are not idiots, right? You think they see what's going on. They've even commented about the changes they're making to adjust. So although they got pummeled there back in September, October, they've adjusted. They see the same data we do. They're probably a little better at checking it out. So because of that, in my opinion, that's what people looked at today. They said, look, I mean, it's better than we expected. It doesn't mean home builders are going to just scream back to 52-week highs, but it does mean that these guys are not going under. They've got the idea figured out there. So anyways, that's that. What else do we have here today? Sector-wise, retail got a little bid. That was just a touch higher after coming up 52-week new lows yesterday. So very extended in the short term there if you like that sort of thing. Home builders did well today. Gold miners did well. REITs did well. That would be your real estate investment trust. Your consumer discretionary stocks, okay, not bad. Just small upticks across the board. Communication services, that new sector there, small up day. Nothing to really get excited about. Transport's a little higher and also right on that support area, big support area. So just little tiny bounces there, but a lot of this is very much in the wait and see mode for the Fed. If we go back to the S&P 500 real quick, I was supposed to mention, remember yesterday I said 137 stocks in the S&P 500 are down 20% or greater. That number went up to 148 today, or 29.6% of the S&P 500 officially has lost 20% or greater. And like I said, some of you would want to go shopping. I had customers today go, Dustin, give me that list, buddy. I got to get that list. I want to go shopping. So I sent that list out to a few of you that asked for it. And know that it has expanded. We're up to 148. I'd like to just track that and see how things go, especially once we start to bounce a little bit in the S&P 500. That'll give us a clue whether things are broad-based or whether it's going to be sector-related, as we've seen in the past there. So that's what I have for you there. Let me just try and navigate away from all this. There we go. So you got Johnson & Johnson also, where we talked about that drop being way overdone. We talked about the idea of it gapping lower on a Monday. It did gap lower on a Monday. Go back and watch the video. It started recovering today, unable to close above the 200-day moving average, but it added 1%. They are doing a $5 billion stock buyback program. I think they upped their dividend as well. If they did, I missed it. I'll apologize for that, but I think they raised their dividend. Blue Apron, this was one of the bigger jokes in the IPO world. Look, there's a lot of IPOs that launched this year that don't stand a chance. And if you just follow them, every week I write an article and I follow up with these the new IPOs coming out. And there's a lot of them that are sort of a joke and they don't stand a chance. And a long time ago, last year, I remember writing about Blue Apron saying, I just don't see it, right? It's like some of these pot stocks. I get what happened today, but I just don't see it. Well, Blue Apron down to 88 cents, breaking through $1. That gives it a valuation of less than $200 million. So even that, I believe, is overpriced. They lost 11% on the day. So speaking of pot stocks, Tilray higher by 16, almost 17% on the day. It was higher a little bit before. They're partnering with Novartis. So if you're curious, that's a public company as well. NVS is the symbol. They're partnering with them for distribution. So Tilray, of course, you guys know, one of the more popular pot stocks there, highly overpriced. If you're thinking about looking at an investment in something like this, you will get a better opportunity. I can't tell you when specifically, but I think that's the best I could do is say, look, the company has a valuation of, $6.3 billion, something like that, on $30 million in sales and zero revenue. Think about it. Just take Tilray, wipe off the name real quick, and then write down like my brother's hot dog stand. If your brother's hot dog stand did the same metrics, would you invest in it at that price, right? If your brother said, I need $76 a share, you would not, right? I don't have a good way to say that. So Facebook, nice recovery today, right? So if you look at Facebook, a little more impressive here that the technical traders are starting to buy and build out of this downtrend here. So I was sort of impressed by Facebook today in light of a market that started off pretty strong and was pulled down pretty aggressively. Know that Facebook did pretty good today. With that in mind, I want to run back to some of the other tech names. Your Google was up about 2% on the day, Twitter 1%, TripAdvisor 0.5% on the day, Adobe 2%. Just going through quickly on some of these just so you can kind of get the picture. Salesforce.com, that one added 1.15%. You got some interest. Intel 1.4%, Texas Instruments 3%, semiconductors, right? Getting into that space a little bit. Microchip higher, Qorvo 2.25%. So you're getting the idea that the tech support was there today. Microsoft higher by over 1% there. Netflix, talking about your big tech names, was 3%. Nvidia 2.33%. Applied Materials 2%. You get the idea that there was support in the overall market today, but where the money went was the highly discounted areas. That tech space, the tech space still leads the way on the downside there. If I could just do this real quick. So tech was almost your best performer today. The industrials were your best performer today, but overall for the year, technology still is down about 25%, by far the biggest losing area. So it gives you a hint that people said, hey, I want to put a little money to work today. Where should I go? They bought the discounts. They bought the big discounted areas of the markets today. So dig through some of that if you're interested and you want to dig a little bit further. Yeah, so that's what I have there. I want to make sure I just got everything in there for you. Okay, yep, that's it. So I thought Facebook was fairly interesting. And just the idea that the market wasn't going to do a whole lot today, totally okay, right? I think it was more than totally okay. So I'll leave it at that. I'll see if there's any questions there. I'm happy to help. Otherwise, I'll wrap it up. Downturn 20% or more for peak. Okay. When at least two of the major. Okay, you guys are talking to yourselves there. Uber and Lyft IPO. You can't wait to buy. That's going to be interesting. We'll definitely talk about that because the way it's going right now, you've got one company that thinks that they are worth more than God, and then you have another company that's kind of like, I don't know, we'd just be happy to go public, pay back our investors, maybe try to do a little something here. So it's going to be an interesting fight. It's like when you see a boxing match, and this doesn't happen anymore, but it used to be that, one guy was like, I'm going to kill you. And the other guy's like, I don't know, just hoping to have a good time, give it 110%. It's a great way to stay in shape. Let's see who gets that reference. Anyways, so I'm interested in the Uber Lyft IPO just to see how that goes. I think if the markets could recover a little bit, they will overprice the bejesus out of those. So we'll see. SpaceX, yeah, they're raising $500 million. If you want to go give them a call real quick, SpaceX going to raise $500 million today. I think I put it somewhere in the list down there below. So that's that. What else? Let me just see, make sure there's nothing else I want to cover. It's one of those days, kind of like a midsummer day in the market where you just say, look, not much happened that is interesting. Of course, a lot happened today, but not anything that's going to move the needle to make you extra bullish or extra bearish today. All of that excitement will come tomorrow, and to be honest with you, here's how it'll happen. There'll be some form of excitement after the Fed meeting. A lot of people think that the markets are going to rally. I happen to think that if they do what I said they were going to do, then I think the markets would actually rally and start to recover off those lows. But that part doesn't matter. What happens tomorrow from 2 o'clock to 4 o'clock Eastern really doesn't matter, right? If it holds near the highs, that's great. That would be the first day in a while where the markets would actually close near highs. That would go a long way, but the real excitement happens on Thursday, how do people respond after that's done? Do we all switch back to sell, sell, sell like everybody's been doing? Or do we start to, find a little bottom here in the short term? So we'll cover it there for sure. So happy to cover that. You think transport's bad right now? I think the sector as a whole is right at an area of support. Now, you can take with that what you want, but if you happen to look back, you have to kind of break back down into a really, really long-term view, like a weekly time period. Go all the way back and take a look. Can I show it? I'm sure I can show it here. There it is. So you got to go all the way back and really zoom out on your charts here. But if you go all the way back to about 2014, that was an area of support that we dealt with earlier last year. And so I think that'll be an area where people won't be too quick to sell or to make a major bearish decision at that point. Add to that, if you were to see the uptrend there, we're basically pulling back towards the uptrend. If you follow charts, that's interesting to you. If you don't, then I just wasted your time. Sorry. Micron earnings, did they come out? I know Micron's earnings. Did I miss it? Micron's earnings were out here. It wasn't good. If that's the stock I'm thinking of, it was Micron. Yep. So brand new lows for Micron. That's going to make a very extended, the start of a very extended decline there. Micron's the one that we've been talking about this downtrend here. Sorry to bounce around so much, but if I can go back. We're down here closer to 32. You actually, to be honest, if you're looking for a buy on this one, if you guys are asking to find it, you actually want this to sell off aggressively tomorrow. If you own it, it's not going to feel good. But if you're looking to buy it, you actually could really have the start of a potential counter trend play if that's what you're looking to do. It's very aggressive, so by no means am I suggesting it. I'm just saying if you could get the best scenario, you hope that it sells off rather aggressively. I believe if their earnings just came out, they're going to have a conference call coming up anyway, so the excitement there is probably not over. We'll see. Hey, James, welcome, welcome. They lowered their guidance too. We'll cover it tomorrow for sure. I'll add it on my list. See what happens after the conference call. Yep. Okay, let's cover maybe just a few other things. FedEx, I like a lot of these, right? These transports, FedEx, UPS, extended, railroad stocks. Although my screen's a little messed up, I believe that is all current. Let me see. Sometimes when it does that. Nope, that's current. So I like a lot of these. You got your railroads, also extended to the downside. That is, look, if you're a long-term investor, you go, okay, we've taken a beating in the transports, but we're going to need that area to support us if we want the markets higher. And being as extended as it is, you're going to have your value players in there soon. So if we look at the transports, obviously very extended, you just need people to stop selling every rally in the broad market. And I think you actually see something there. So I'll keep my assumption that the markets rally going into the end of the week. How much? I hope a lot, but that part's the tough part. I just think we get through the Fed. If we can somehow get through this government shutdown thing without a lot of drama and they just sort of quietly go, yeah, we're going to push it off till February, I would bet you that we get at least a little short-term bounce through the end of this week. Now, that's hyper short-term. Of course, that doesn't help the long-term investors, but it gives us a glimpse as to what people are thinking going forward, and I will cover it for you. So I hope that helps. Look, if you're a newer investor, I'm speaking to you now for about 1 minute. If you're a newer investor and you're starting in this market, or you have a 401k at work, and you're going, hey, oh my God, this scares me, I'm going to just stop my contributions. Think about what that sounds like. If you get paid at work and you put money into a 401k, everybody's scared about the market, and you call HR and you say, I would like to cancel my contributions for now, I'm scared of the market. That would be like going into American Eagle and saying, could you please lift the discount off that shirt? I want to buy it at retail. I want to buy it at a higher price. Could you please just not discount that shirt? Been eyeing it for months now, but I want to buy it at regular price. Think about that. If you're investing in crypto, this is why everybody gets scared, because you think, oh my God, I'm going to lose everything. Could you lose everything in crypto? Yes. Could you lose everything in pot stocks? Yes. Could you lose everything in Blue Apron? Absolutely, but you don't buy just Blue Apron, and your 401k at work, your retirement accounts, wherever you have them, whether they're with us or anywhere, they're not invested in just one thing. So look at this as a discount. take the opposite approach. When things fall, call HR at work and say, I'm putting in 3%. I know Dustin says only go to the match, but I'd like to do another 3% while things are cheap, right? Let me suck it up and let me just put a little more in. When things recover and they're going well, then back it down if you want, because then that's like going into American Eagle and saying, oh, the shirt was less expensive. Now it's more expensive. I'll wait. You know, I'll buy one, but I'm not going to buy more than one or something like that. So think of it as in terms of anything else in life, you want the discount, and when you get a discount, whether you're a business owner or something, and you buy drumsticks, right? Let's say I sell drumsticks. I happen to always keep drumsticks around. So let's say I buy drumsticks, and they're all of a sudden cheaper. The price of wood goes down, and I want to buy drumsticks. Well, then I'm going to buy a lot more of them, right? I'm not going to stop all of a sudden. So it's so hard to get that sort of ingrained in the newer investor's mind, which is normal. You're not supposed to have that skill set yet, but work with me, whether you're one of our customers or not, that's fine. But work with me through this and let me help you get through the idea of a discounted stock market. Flip your thinking a little bit. Like I tell my customers, I'm going to pull you. I'm going to just drag you through whatever happens in the market. You will thank me in the end, I promise you, but let me drag you, kicking and screaming like a kid after a long day at Disney World. Let me yank you back to the parking lot. You'll be fine, maybe some cuts and bruises, but let me just pull you along, and then the next time, I'll be pulling somebody else along, and you guys will help me do it, okay? So trust me on this one. If you've gone through it, you know what I'm talking about. Leave a comment below for those that have never gone through this before, and whoops, I'm going to get another light bulb or pay the power bill, and we'll be on our way, okay? So that I just wanted to throw that out there. I'm going to keep throwing that out there at the end of these because you will love it. I promise you, when you buy a discount, I don't care where you're at, what you're buying. If you're diversified and you're buying a discount at work in your 401k or whatever, you will love it. I promise you. Okay. Oh, and I'm not saying, by the way, so for anybody that wants to say, oh, he says buy the discount, but how do you know where the low is? I'm not saying that you call HR and say, how much do I get paid a year? Can I just dump it all in right now? Don't time it, right? I'm just saying up that contribution. Don't shut it off at the very minimum while things are discounted. We don't know where the bottom's at. The bottom could be another 20% lower, to be honest with you, right? Thursday in our Wine and Wealth class, I'm going to cover bear markets in the Russell 2000 as well. We have a different topic in mind, but I'm going to cover that so that you guys know when it's time to dive in on the aggressive side, how long, what's going on in the Russell 2000, when's the right time. So I just want you to essentially dollar cost average, ease in. But God, I keep seeing people say, and I was listening to Dave Ramsey today. I went to go get food. I left here, I went to go get food. Dave Ramsey's on the thing, and someone asked him if he should quit contributing to their 401k. And he said yes, but it was a different reasoning. That's fine. But it got me thinking, like, there are people that are trying to stop now. This is your opportunity to just buy a little bit at these discounts. Just don't stop, right? You don't have to up your contribution, but just remember I said that, right? It's very hard to do. It's easy for me to tell you to do it. I understand it's very, very hard to do, but it will be worth it. It will be worth it. So anyways, that's all I have for you. I'm going to wrap it up. Back to work for me, and we will talk to you guys tomorrow. We got a new Doe show coming out tomorrow. We're going to try to help you out with a couple interesting things there and open up the conversation. You guys, you know how I say I'll answer any question, whatever it is you have about me or my company, anything that it is. It's all public record anyway, so I will answer any question. Tomorrow I'm going to take it a step further on the Doe show. So have a great rest of your day or evening, wherever you're at, and we'll talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.